I promised I was going to make a video on it, and here it is. So has the stock market finally reached a bottom, or is there more to go? I'm also going to be discussing what you should do as an investor, what steps and action that you should take right now. Before we begin, if you do think the market has hit a bottom, then go ahead and give the video a big thumbs up, signaling that it will only go from here. If you think we have not reached the bottom yet, then give the video a thumbs down, click the dislike button, signaling and indicating that the market will only continue to go down from here. Stocks could be finally returning to rational behavior, and we could be poised for another substantial decline. Recently, the Dow dropped more than 700 points in its worst day since June 11th. This is as resurgence of virus concerns start to grow. Recently, the Dow dropped over 710 points, or 2.7%, to 25,445.94. The S&P 500 closed 2.6% lower at 3,050 and change, while the Nasdaq Composite slid 2.2% to 99.09. This was the first time the tech-heavy Nasdaq posted its first daily decline in 9 sessions, and it was the worst day for the Dow, S&P 500, and Nasdaq since June 11th. This was mainly off the news that a few problem states like Florida, Texas, and California are starting to see massive spikes in cases. This chart shows new cases in the US daily, of course the apex being in April, and now if you look at the chart, now as we're heading into July, it's starting to return to those territories that we once previously thought was the absolute apex crux of the pandemic. Florida said its confirmed cases jumped by 5,508 on just one day. That was a record, and now total over 109,000. The state also said its positivity rate rose to almost 16% from 10.82%, and stocks fell to their session lows after Florida reported its latest case figures. At one point, the Dow had fallen more than 800 points this past Wednesday. Florida also announced a ban on alcohol consumption at its bars after its daily confirmed virus cases neared 9,000. The Florida agency that governs bars announced the ban on Twitter Friday, just moments after the state's Department of Health reported 8,942 new confirmed cases, topping the previous record of 5,500 that was set on Wednesday. According to the statement, effective immediately, the Department of Business and Professional Regulation is suspending on-premises consumption of alcohol at bars statewide. This is because state officials have attributed the jump in cases mostly due to young people flocking to bars. This was after most of them reopened in the state about a month ago, with many of the bars ignoring the restrictions aimed at social distancing that would help the spread of the virus. California is also one of the states that have seen a dramatic spike in cases, adding a record of more than 7,000 in one day on Tuesday. In Texas, the number of cases have jumped by over 5,400, and meanwhile New York, New Jersey, and Connecticut, they have now ordered visitors from certain hotspot states to quarantine for 14 days. So now the increasing number of newly confirmed cases are starting to dampen expectations of an economic recovery. But before we talk about anything in the future tense, let's recap what happened in 2019 and leading up to Rona. We began this year very strong. The Dow rose 25% in the year of 2019, and the economy was booming. Even earlier this year, as China was diagnosed with the Rona, stocks moved higher and the economy looked stronger than ever. But then when it became clear that this epidemic turned pandemic was much worse than a routine health event, the US stock market came under intense pressure and shed over 37% in only 6 weeks. But then it had a stunning rebound, and from its March 23rd bottom, we still saw the Dow soar nearly 50%, leaving it less than just 10% below its February 12th record high close. But in these last couple weeks, it's becoming apparent that the US and global stock market, for that matter, is changing its tune and turning direction. And if you were to ask most Americans, they're not very confident about the current stock market right now. In fact, according to a report from Allianz for Life conducted at the end of May, around 54% of respondents feared the market had not hit the bottom yet. Now, despite this dire outlook, there was some good news. 42% still believe that right now is a good time to invest. But let's look at what happened with stocks in past recessions. Well, it turns out that stock market rallies are extremely common during recessionary periods, just as common as the migration of birds towards the north in the springtime. This latest stock market rally continued despite a drop in GDP and a post-depression all-time high unemployment rate. Stocks do not always follow the path of the recovery. At times it will march to its own drumbeat, ignoring the fundamental data. When this occurs, the rally is often based on the degree of loss. So in essence, the greater the drop, the greater the rebound, and that seems to be the case here. This chart shows a rocky recovery of the S&P 500. It shows the December 31st, 2019 close at 32,3078. At one point during the apex of the crisis, it was down 34% from its peak, and it has made a tremendous recovery. But now with this resurgence, there's a lot of doubt being casted here. Chris Rupke, a chief financial economist at MUFG, he said, quote, "The latest virus news is not positive for the stock market, which was betting the worst of the pandemic recession was behind us. All the hopes of investors looking for a better economy to improve the bottom lines of companies shut down in the recession have been dashed. Forget about the fears of the virus coming back in the fall. The number of new cases and hospitalizations in states like Arizona, Texas, and Florida says the threat is happening right now." So did stocks reach their ultimate bottom on March 23rd? In my opinion, I do think we have, but many economists would disagree. This is because when you examine the past 14 recessions, beginning with the Great Depression, the shortest amount of time that stocks bottomed was during the recession of 1945. Back then, stocks have bottomed on day 53, which was about 22% into the recession, and the average length of time it took for the Dow to reach its lowest point during recession was 61%. So in other words, if a recession lasted 100 days and stocks hit their lowest point on day 61, then it could be said that stocks bottomed when the recession was 61% complete. So this chart contains the data that supports it, and recessionary periods are listed on the horizontal axis in this case. So it shows the percentage days to the bottom. So 1929 to 1933, it was 82% in which the stocks reached bottom. And just as recently with the 2008 crisis, it was over 85% in which that was the average time before stocks bottomed during that recession. So in 9 of the past 14 recessions, stocks bottomed in the second half of the recession. In 6 of them, stocks didn't hit bottom yet until the recession was over about 80% complete. Time will only tell if we could see more red, but with most of the country starting to reopen or reopen completely, I don't think we could ever see the market hit its territory that it was in the apex of the crisis. A lot of the stock market drop had to do with uncertainty and fear, and now some of those fears have been tamed. Now, if you do think the market will continue to go down for the next few months, you may be very hesitant and might want to hold off until the market does reach a bottom. Historically, crashes do present great buying opportunities, so it only makes sense that you would want to wait. But there's a big problem with that, and that's that no one could truly predict when the market will be at an exact bottom. Newbie investors, expert investors, Warren Buffett, or any Joe Schmo, they cannot predict exactly when the market will bottom out. Investors are notoriously bad at doing so because when the news is bad, the tendency is to think that it will only get worse. There's no point in trying to time your investments or wait for stocks to decline even further. So rather than getting stuck sitting on the sidelines as the market goes up because you thought you could time your entry perfectly, you're far better off focusing on finding the right companies and buying as much as you can afford at any given time. So if you're doing that and the stocks fall a bit, it doesn't matter because you haven't actually realized any losses until you click sell. If you're invested in a strong company, not some garbage penny stock, then your company could withstand a bear market and then recover after it's over. And you might find that some of your investments might not even go down, as some companies actually enjoy thriving during bad times. The one key thing to remember is that history shows that the stock market produces a 7% average annual return over time, and no other investments that present a reasonable level of risk can even come close to that. Who cares if your stocks went up and down a bit over the last decade? The idea is to look at where the stock is in 10 years from now, 20 years from now. That's what you should be looking at, the total profit. And if you don't feel that you're good at picking companies, then you can invest in an index fund and get the entirety, the totality of the market and diversify your investment. I did a video, very popular, it got a lot of views, showing you exactly how you can become a millionaire investing in a very, very safe form of investment where it doesn't require you to pick anything or analyze anything. You can just throw your money in it just like a clock on autopilot, and you could in fact become a millionaire within a certain period of time. If you'd like to see that video, the link will be down below in the description and you can see that video it's one of my most popular videos. Let me know your thoughts down below in the comments. You think we've hit a bottom? If yes, then why? If not, then why? Let me know your thoughts down below in the comments. But I hope you enjoyed this video. Hope you enjoyed it. If you did, be sure you give the video a big thumbs up, smash that like button. And if you'd like to see more videos from my channel, be sure you do click that big red button, subscribe. I post videos every single week covering business, finance, entrepreneurship, mindset, strategy, and tips and tricks from my own experience. Be sure you do click that big red button. And if you'd like to be notified every single time I make a new video, so you're first line to see it before anyone else, be sure you do click that little notification bell as well, so you're notified every single time I make a new video. See you in the next one.